So we'll finish CPs and then stop with that. Stop with that. Now we'll start with certificate of deposits, which are called as CDs. What are CDs? Now, this is another instrument introduced in 1989. This is issued in dematerialized form or as substance promissory notes against funds deposited at a bank or other eligible financial institution. Earlier we were talking about corporates issuing. We'll talk about banks which issue certificate of deposit against the banks, against those institutions which had deposited funds. So CDs can be, are you seeing my screen? CDs can be issued by commercial banks, excluding regional rural banks and local area banks. All scheduled commercial banks are eligible to issue CDs. This is again a short-term instruments. Like CPs, they are also unsecured instruments. And like earlier we said corporates issue CPs, now it is banks which are issuing CDs. As again, this is also a money market instrument, can be used for raising short-term funds. Now, when you talk about CDs, other than regional rural banks and LAPs, all other scheduled commercial banks can issue this. This is also issued at discount and redeemed at par. And so now, when you see the amount, banks have the freedom to issue CDs depending on their requirements. And a financial institution can issue CD within overall limit. Umbrella means whatever limit is fixed by the RBI. They issue CD with other instruments. Along with other instruments, term money, term deposits, commercial papers, all these instruments. Along with that, they can issue CD also, which should not exceed 10% of the net owned funds as per the latest audited balance sheet. See, just to repeat, commercial paper was issued by corporates, high-rated corporates, whereas certificate of deposits are issued by financial institutions like bank. Right? Again, they can be issued along with their term deposit, etc., and short-term deposit, whatever. So, minimum amount of a CD should be rupees 1 lakh. The minimum deposit that could be accepted from a single subscriber should not be less than 1 lakh and should be in multiples of 1 lakh. 1 lakh, 2 lakh, etc. Right? So, investors are usually individuals, corporates, and then we talk about all these mutual fund companies and non-resident Indians, but only non-resident Indians only on a non-repatriable basis. What does non-repatriable basis mean? Non-repatriable means when foreigners invest funds here. Why do they invest funds? Because Indian market gives them higher rate of interest. So if they invest 1 lakh and if they earn 1 lakh 10,000 after a certain period, they can take back only the 1 lakh they have invested. That 10,000 has to be spent in Indian economy only. Do you understand that? When I say non-repatriable basis, it means that profit cannot be taken back to the foreign land. Right? And this one CD cannot be endorsed to another NRI in the secondary market. All these majorly primary money market instruments are primary market instruments, and they cannot, if I buy CD and I cannot sell it to somebody else, I will only have to redeem it. Maturity periods should not be less than 7 days and not more than a year. 7 days to less than a year, right? Or 8 days to less than a year. And financial institutions can issue CDs for a period of not less than a year and not exceeding 3 years from the date of issue. It acts as a short-term as well as medium-term instrument. Now again, as I said, it is also issued at a discount and redeemed at face value. Again, financial institutions are all allowed to issue this on a floating basis. I will tell you what floating basis is. Floating basis, but then it has to be transparent when they change. Like for example, all our rates are linked to the prime lending rate. We call them as PLR. The RBI fixes 5% is a prime lending rate. So whenever I am lending, plus they fix, a benchmark rate and markup rate, like 5% plus 25 basis point, 100 basis point equal to 1%. So which means 25 basis point will to 0.25. Say like, I can start lending. My most prioritized customer will get it at PLR. Like for example, supposing I have 3 customers coming to me. Say Tata Steel company is coming to me for a loan, and then I'm explaining you what PLR is. All banks have to go by PLR. PLR is set by the RBI. Say PLR is set to 5%, and I have 3 customers coming. Say Tata Steel, and then a slightly smaller and a less popular company, and then I have say for example, I have another company which says it's not all that popular, but then the bank wants to lend to him. If my bank wants to lend to him, it will say for the first person I will lend at PLR. This Tata Steel ke liye I will lend at PLR. And for the others I will lend at PLR plus 125 basis point, which is 1.25%. So 6.25 is the lending rate for the next customer. And for the least popular person, I want to lend, but then I will lend it at PLR plus 200 basis points, which is 7%. I hope you are understanding, right? Are you able to follow? See?
Yes, ma'am.
Saying like 100 BPs per year, right? Basis points. Basis points equal to 1%, right? So जैसे जैसे customer को lend करना है, but then I will lend it at the rate that is going to be feasible for me. The rate that is going to be feasible for me, and hence I will lend it at a rate for the bank, feasible for me in the sense for the bank. So I will lend it at a rate that is going to be profitable as well as I don't lose the customer also. Tata Steel ke liye I cannot lend at 7% because he will get it from somewhere else at 5%. PLR rate is uniform for all the Indian banks, right? Now, when I talk about that, it is going to be the floating rate. मतलब CDs can be issued just जैसे जैसे PLR बढ़ता हो जा रहा है या कम होता जा रहा है, my rates on certificate of deposits also go up and down because I will have to pay to the investors of CS PLR to the investors of CD. So this rate will go up and down when I lend it at floating rate. That is the object. And it will be very transparent, how much up or down, etc. There will be no surprises on that. And again, banks have to maintain their reserve requirements, so they participate in investing in CRR, SLR, etc. If they have to maintain that, they will be participating here in the market or by investing in certificate of deposits. CDs in physical form are freely transferable in the sense it can be endorsed. Just a second. Yeah, it can be endorsed. Like I can transfer it. Like though it was issued at a dematerialized form or as a promissory note, I can endorse it. Supposing I owe money to somebody, I can always transfer this in his name, right? I owe money to some ABC. I will say I have a CD investment. I will transfer it in your name and you can get it in your this thing. You can get it encashed. I hope you're following this. Now, when I talk about structure of money market, we have the Reserve Bank of India, which is the apex authority, and this authority also is the regulator of money market. And then we have, please remember, RBI is the regulator of money market in India. Apex matlab topmost. And when I have Discount and Finance House of India, it is an intermediary. Remember what I told you? It is going to bridge the gap between surplus fund and shortage of fund. So RBI is going to be the regulator. Apex. And then DFHI acts as an intermediary. Commercial banks are going to be under them. They are going to be participants, like they will have all the SBI and then cooperative banks, all nationalized banks. We have the private banks and foreign banks also participating. We have the development banks also participating here, IDBI, IFCI, NABARD, etc. And then in the unorganized sector, we have these indigenous banks, money lenders, like you must have seen all these pawn brokers, etc. जहाँ पे गिरवी रख के आप पैसे लेके आते हो, all these people are also an important part, vital part. Then we have the chip funds, CD, all these local chip funds if you have, like colony में 10 लोग के ये लोग सब unorganized sector में आते हैं. There are some state cooperative sector, central cooperative sector, primary agricultural credit societies which lend and borrow money, and then we have state land development banks. All these are participants, right? And primary land development banks, central land development banks, etc. Any doubts so far? The structure starts from RBI, who is the regulator, and the apex authority. Then we have the intermediary, which bridges the surplus and shortage of funds. Then we have banks and commercial banks and development banks participate. And then we have the unorganized sectors also who invest and borrow money there. Then we have cooperative sectors. Local cooperative sectors which are state, central, and then we have the primary agricultural society, credit societies which have where for agricultural lending and borrowing takes place. And then we have the state land development banks, central land development banks, and primary land development banks. Any doubts so far? We saw what is money market, how does it operate, what are the objectives, what are the functions of money market. We saw the different sub-markets of money markets. We saw a few instruments, vital instruments, like your treasury bill, commercial bill, call money market, and then we saw Discount and Finance House of India, and then we spoke about the structure of Indian money market.